Are you spending money on your business but feel like the business is not yet official? Well, I've got some news for you. Those expenses, they count. Let me show you how. So, even if you haven't made a dime yet in your business, the IRS considers you in business the moment you start spending. In fact, you can write off up to $5,000 in startup costs in your first year of business. In this video, I'm teaching you what startup costs actually are, how to track your startup costs so you don't miss any deductions, and how this can save you thousands of dollars on your taxes. So stick with me to the end because I have a nice surprise for you. It's a free tax write-off checklist to help you stay on top of this and to make sure you're getting all the savings you deserve. My name is Chika Obih, and I've been a CPA for 15 years now, helping business owners maximize their tax savings with confidence and ease. And I want to do the same for you. So let's get into the startup costs. Many new entrepreneurs hesitate to call themselves business owners because they haven't yet made money in their business. Now, I love the humility that's involved with that. However, let's break that myth right now. The IRS, the IRS does not care whether you've made $1 or $10,000. If you are spending money to build your business, to start your business, then you are a business owner. Let me say that again. If you are spending money to build your business or to start your business, then you are a business owner. So change your mentality. You are a business owner. Your business expenses don't magically start counting the moment that you turn a profit. No, they start to count when you start spending. So instead of seeing those expenses as costs, no, don't look at it like that. Instead, start seeing those expenses as investments. They are investments because that is what they are. You are investing in starting your business. With startup costs, I want you to think of startup costs as the money you spend before your business is fully up and running. So these are the investments that you make to get things off the ground. Things like setting up your website, registering your business, buying equipment, or even taking a course to learn how to run your business better. All those types of costs are startup costs. Startup costs is the money you spend to launch and grow. The money you spend to launch and grow. If you spent money before you started making money, those costs are startup costs. And the best part, you can write off, you can deduct up to $5,000 of those startup costs in year one. Let's talk a little bit more about what counts as startup costs. There's four big categories of startup costs. Number one, business setup costs. Number two, education and training. Number three, tools and equipment. And then lastly, marketing and branding. So business setup costs, think of things like setting up your LLC, registering your LLC with the state, buying a www website, paying a business attorney, legal fees, things like that. With education and training, that's courses or coaching programs or business books. Tools and equipment, things like laptops or design software, buying office supplies such as pens and paper and journals. I love a good journal myself. And business cards, right? You do a lot of networking, in-person events. You got to have your business cards. And then lastly, with marketing and branding, you're paying for a logo, you're developing your website, or you're even paying for social media ads. All those things count as you're starting up your business. If you spent money to get your business up and running, it likely counts as a startup cost. Things that you incur generally within the first year or even months before the official first year, which for me, I would define official as you receiving your first client. it's like, okay, it's official, right? But anything that you've purchased, you've paid for, you've invested in prior to that official stat of getting your first client, that is considered startup costs. I ask you something. Drop a comment and tell me, what's the first thing you invested in your business? For me, it was 15 years ago when I left public accounting. The first thing I invested in was my website because I wanted to be able to tell people about my CPA services, how I can help them via a link as opposed to saying it all the time to each and every person that I spoke with. So tell me, I would love to know, what's the first thing you invested in for your business? Now that you know about startup costs, what they are, let me tell you more about how to track your startup costs so that you can claim your startup expenses. There's three things you need to know, three steps. First step, keep your receipts. These days, everything is pretty much digital. So keep those receipts, maybe start a Google Drive folder, or if you have QuickBooks or some type of accounting software, keep those receipts, put them in a folder, save them in your email inbox, whatever. Just don't delete them. Track your receipts. Have a way to find your receipts. Step two, you want to track your expenses. I would say if you're in your first year of business, you want to develop a habit where you're tracking your expenses on a weekly basis. Trust me, your future self will thank you that you have all those numbers tracked. Now, again, if you're not using a software such as QuickBooks, it's so easy to use a simple Google spreadsheet. And what you would want that spreadsheet to have, it's five different columns. So column one is the date in which you made the purchase. So let's say you bought a laptop. So column one is the date. Column two is the expense name. So the expense is laptop. Column three is the amount. So how much did you spend on that laptop? Include the tax, the sales tax, right? So whatever that amount is. Column four is the category. So category means what type of expense is this? So laptop would fall under the category of equipment or computers. That would be the category. And then lastly, column five, generally, if it's something like a laptop, the business purpose is, yes, it is for business, and it's how you get your clients, right? So that is the business purpose in the case of a laptop. Let's take another expense, something that's more nuanced. Let's say meals, right? And in this case, it's a meal that you had with a potential client. And so because it's a potential client, it's business related. So the date of that meal, you guys went to a restaurant. Column two, the expense name, it would be client meal. Amount, what was the total that you paid for that meal? The category is meal. That's the category of the expense. And then lastly, what's the business purpose of that meal? And here it would be a little bit more detailed because it's more of a nuanced expense. Like a laptop, it's pretty clear to the IRS that, okay, yes, you need a laptop for business. But with meal, which can have personal reasons as well as business reasons, you want to make sure that you have the details of the business purpose. And so for this case, the business purpose is you had a lunch meeting with a potential client. If you're using a spreadsheet or even if you're using a software, it would need to have all those five compartments: the date, the expense name, the amount, the category, and the business purpose. So now that you have receipts saved, and now that you've tracked your expenses, now the last step is to file the tax return, making sure that you've included those startup costs. And so either you're working with a CPA or a tax professional, or you're doing it yourself, you now have everything you need to file that return. With the CPA, with the tax professional, generally they're going to make sure that you're maximizing your deductions. So it's usually worth the investment to pay for a CPA or pay for a tax professional. But if you're just starting off and maybe the budget isn't there yet, then you can file confidently when tax time rolls around because you have tracked your expenses, you have the receipts, and boom, you just report it on the returns. So that's how to track, that's how to claim your startup expenses. Now that you know about startup costs, please do not let all these tax savings slip through the cracks. Contrary to popular belief, the IRS wants you to claim these expenses. So make sure that you do that, okay? And because you stayed to the end, I'm going to tell you about my free tax deduction guide. So grab yours today. This free tax deduction guide is going to help you track your expenses easily so that you're not scrambling at tax time. The link to the guide is in the description below. So go ahead and download yours today. Now, I want to know one thing. What's one thing you spent money on that surprised you when you found out that it was deductible? Tell me in the comments. I really, really love hearing what you're investing in. Don't forget to like this video, subscribe to my channel for more tax and business tips, and I will see you in the next video.